And then we'll invite Jitendra Gohil of Suisse Wealth Management to talk more on the show. In fact, we have Jitendra with us. He's the head of India Equity Research at Suisse Wealth Management. Jitendra, afternoon. Thanks so much for joining in. This is Rima here. How are you feeling about the markets? 6 good days on the trot. The Nifty is very close to its all-time high level. So is the Nifty Bank, just about 2% away. Are you convinced that there are more legs to this rally now? Or do you think the macro headwinds are getting too strong?
Hi, Rima. Thank you for inviting me on your show. First of all, we think that market is a little bit underestimating India's recovery, which is underway. So we feel that India's macro is going to surprise a bit on the upside. If you look at the PMI numbers, which have come really, really strong, and on a relative basis, also look at China, which is just opening up, and the numbers are below 50 right now. So I feel that relative to other markets and relative to our own past fundamentals, I think India has done pretty good. The macro numbers are very strong. If you look at the power sector growth, electricity growth, that is also reasonably very strong. Airline sector is picking up. The tourist or the tourism sector is doing pretty good. So we think that market is going to see some kind of upside in terms of the GDP growth numbers. Now, coming to market, Indian equity valuation was very expensive. But after this sideways movement over almost like 18 months plus, we have seen the valuation has corrected. And after the FPIs have sold off Indian equities for the past several quarters now, their holding of BSE 500 is at a 10-year low. And also, if you look at the near-term triggers, the oil has fallen to below 75 right now. So I feel that, yes, we were expecting that market will see some kind of upside in the near term, given the macro strength, and that view is played out. Now, what next? I feel that in the next 3 to 6 months, we might see some kind of consolidation. Our house view is that we might see a volatile H1, and in the H2, second half, when Fed starts to pause their rate hike cycle, and also the global growth slows down and commodity price starts to correct, I feel that India will see a nice recovery in the second half. So our view has been that use this volatility, use this correction as a buying opportunity with a recovery potential in the second half, and that view remains as of
now. Okay, so basically, Jitendra, you're saying the 3 months now from here, the market stays flat, and then after that, July onwards, you start to see more upsides. That's broadly the view?
So it's very difficult to exactly time it. And,
yeah, no, I get that. Not, of course, pinning you down to specific dates or months. Yeah.
So I think that, why our view is that second half recovery. Let's focus on that. I think, what we need first is the Fed should pause. Our view is a little bit hawkish on the Fed. We think that Fed will raise rates by 25 basis points and then pause for longer compared to what market is expecting. Market is currently expecting that Fed will start to cut rates in the second half. So initial part of the second half, I feel that market may get some disappointments from the global macro perspective. And hence we think that we might get better opportunities to buy. And hence whenever there is a large correction, we think that that is a good buying opportunity. And why second half recovery? We think that in the second half, the global growth slowdown worries will play out. We think that that might lead to some downward pressure in commodity prices. And once Fed starts to stop their rate hiking cycle and become a little bit dovish or starts to look a little bit dovish, I think RBI will have headroom to cut rates. And that might lead to a kind of a nice support for India's valuation as well as earnings. So we think that right now the global macro especially is extremely challenging. And hence we are neutral on equity with a view that one should buy on this dip at least till June, July. We might see some clarity emerging from the Fed side.
Jitendra, hi, afternoon. So just want to get your sense on earnings. Since you are optimistic on the market in the second half, what is your read-through of the season as of now? And where do you see sort of potential for perhaps more positive surprises as we head down the year?
Hi, Subi. So from earnings perspective, what we have seen in the past that the sell side consensus has been always a little bit more optimistic at the beginning of the year, and then we see some kind of correction. So from earnings side, we are 3 to 4% below the market. So we think that there could be some small correction in earnings projection, but that's not very sharp. I feel that while the revenue growth might see some kind of downside, but margin surprise, as we have already seen in tire companies, I just saw your report on that. We think that this correction in commodity prices might support margins, and that might offset the weakness in revenues. So we are very convinced that earning growth will be led by banks and also some of the consumption companies which are commodity consumers. So we are not very much negative in terms of the downward surprise in the earnings perspective. We think there could be some correction, but it won't be that material to be so much worried. The only challenge I feel could be from the weather side. I feel that it's still very early to talk about weather conditions, but we have to continuously monitor the situation. And if it starts to hurt inflation and the agriculture output, and then probably there could be some negative surprise on the earnings side. Otherwise, I'm a little bit more convinced that we won't see a major downside in earnings.
All right, hi Jitendra. Jitendra, what about the cement pack? I think you all were reasonably optimistic out there, but now you believe it's time to take money off the table?
Hi Nigel, yes, I think we have seen a very sharp rally, and cement has been extremely overweight in our portfolios. Probably one of our top holdings over the past few quarters. We feel that as we enter monsoon season, there could be some slowdown in demand. It's a seasonal factor, and we think that the pricing growth hasn't been that sharp. I think volumes have been surprising on the upside. So I think from here onward, if cement company starts to do well, it will be a sell on rally. So we have trimmed down exposure to cement companies, and as we move forward, and if we see more strength in cement, we will use that as a selling opportunity.
Jitendra, we'll leave it there. Thank you very much for joining in. Get into a break. On the other side, we'll get you a few BTST calls. Videsh will be back with us.